Good morning, audio update for the stock market and some outside markets. It's June 7th, it's 7:06 a.m. Eastern Time, and I'm Rich Possum for Critical Point. Let's talk about some outside markets first. The crude oil market should be stable to higher into July for the second chance for a minor long-term top, and it would be the second of three opportunities for such a top. I still think crude oil will be stalling out on into next year once that top's in place. Otherwise, it looks like they want to push crude oil over $70 a barrel over time. The market is already overbought, however. Now let's move from crude oil over to the gold market, and we find the gold market is due for a level 2 top. It's also due for a level 2 bottom almost immediately. So last week's setback might have been all we will see, and they're going to continue to buy gold into July, try to keep it up along with other commodities, specifically crude oil. However, the model is warning that this level 2 top may be the more important level 1 top, and that could be significant for gold, that we're going to see some consolidation for a while. And I wonder, is that a clue that real interest rates won't be negative enough, which is also a clue of the chance for interest rates in general to not be all that high going into August. And as you know, I've been saying for weeks now, interest rates will be firm into August for the first opportunity of a minor long-term business cycle top. So let's go to the 10-year note then and look and see what the interest rates are doing. And we saw a nice bounce in interest rates 2 weeks ago on into last week, but then they started to recover a little bit. Rates pulling back, that is. I suspect the rates need to chop around here a little bit this week on into next week, maybe the following week, for the earliest for a level 2 top in rates, and then it's going to be almost immediately a bottom in rates, and then finally move lower. So it looks like during the month of June, rates can be stable. I don't know, and maybe even lower, and that would help the stock market forecast of being bullish this month. But as we look out to July and August, it does look like rates should be moving higher, but I now question, are we going to see another surge in rates? I don't think they're really going to get all that high, and I think looking from this year into next year, rates are going to turn into a trading range, back off somewhat. I just don't think it's going to be all that bullish for interest rates. Now let's go to the dollar, which is obviously not only dealing with the global scene of currencies, but it's dealing with global interest rates and U.S. interest rates versus global inflation and U.S. inflation. And for the moment, the dollar shows evidence that we made a correct call for a level 1 bottom, but it's already due for level 2 top, and it really hasn't rallied. It's done nothing. It's really stable. So my thoughts are, if we see a violation of the U.S. dollar index of the low of 2 weeks ago, we should assume we've already seen a level 1 bottom followed immediately by a level 2 top, and the dollar may want to go lower into August or even on into the end of the year, which certainly supports our long-term bearish stance, but it doesn't support the current forecasts relative to a chance for rising interest rates. It would be a clue that the dollar market does not believe U.S. rates will rise fast enough relative to inflation and or relative to the rates globally. So something to keep an eye on. I think the upside's probably limited for the dollar, but again, if we see it trade over 90.90 for the U.S. dollar index and there's still time to rally, say, into August, that could still be a clue that, yes, we are going to see that pickup of interest rates. All right, what else can we talk about here for those of you on the Bitcoin side? That maybe Bitcoin's going to be stable for the next week or two here, put in a level 1 bottom, then bounce into a level 2 top. But if it doesn't bounce very much, I'd still be concerned something's going on long term. And we may have just seen a minor long-term top in Bitcoin, and it will be months or years from now before it finally violates that top. And I wouldn't rule out a sharp decline yet as it goes into this level 1 bottom in the next few weeks, okay? But for the die-hard bulls, I must say, there's no high probability for this long-term call right now. It's possible Bitcoin is actually a buy. You can argue that it's near chart support of the 30,000 level, and it is oversold on weekly indicators. Okay, I think that's about it for that. I think the VIX can be stable to lower because I still think the stock market is going to move higher here, and I question whether we're going to get any additional negative impact from inflation or higher interest rates, and I question any bearish news. I think we have a net bullish scenario for a very long time for the stock market. I'll admit that it seems like the bullish news is not that fresh or exciting. It's not being refreshed. So it may be a struggle higher for the stock market, but it looks like it should continue to move higher within its long-term bull market. By the way, in sense of inflation, I think we're analog-wise, we're in 1951 right now for inflation. And if you look at it, that was the highest inflation for the rest of that decade, I believe. I think in 1957, maybe inflation bounced almost back to the 1951 inflation. I think we're that kind of scenario where we are seeing the highest, worst of inflation, if you want to call it worst. I think higher inflation is a wonderful thing right now, coming out of a recession. But there's no question it can be up for too long, too high at some point. But I think we're probably going to see the highest numbers this year for inflation, and we're going to see lower numbers over the next several years. But keep in mind, if we do a cumulative kind of study of that inflation is going to really continue to keep on chugging to the upside until we get to the next primary recession near the end of this decade. Okay, that's my story on inflation. Now, for the stock market, the market is due for a level 4 intra-week swing bottom today or tomorrow, which means they're probably going to sell. But I'm suspicious it won't even trade below the 5-day average, so keep an eye on it. I doubt it's going to trade back to last week's low. And the reason is, as we zoom out, the next larger trend, the level 3 trend, should be up at least for a few days this week, if not all of this week. And I think that's rather supportive of our scenario that the level 2 and level 1 traders, which are the largest, most important traders, creating the biggest trends during the year, that they're going to continue to buy and accumulate stocks this month, that this is going to be an up month for the stock market, and maybe up for early next month, then down, or it may just be down, I don't know, but we'll discuss that as time progresses here. And I think it's going to be rather limited, even though it's one of the most important downturns during the year. I think it's going to be rather limited during the month of July. And all that tucks inside the long-term scenario. So my guess is the level 4, level 3 traders, they may want to sell. If they sell aggressively, we may not see the price response because the level 2, level 1 trader will act like a sponge, just soaking up that supply, soaking up that selling. Okay? So that's our scenario here until violation of last week's low. Let's give the bulls a chance here to not only be bullish this week, but to be bullish this month. I think we're probably going to see a record high made this week. Past results are not necessarily indicative of future results. Have a great day. Thank you.